So will the stock market crash again? Let's go over both fundamental and technical analysis. Hi, I'm Heinrich from Value Investing. Currently, I don't think we'll have a massive crash again, and for that I have both fundamental and technical reasons. Let me explain them to you. Let's start with the technical analysis. If you look at recessions and depressions, you will see that every time we had a recession or depression, the market went down in the first phase, then the recovery followed, and then the market crashed even to the lower levels. But why do I think this time it won't be the case? The history shows that each time the market crashed by over 25 to 30% and recovered the crash back by over 50 to 60% of the damage, we usually didn't see the continuation of the crash. Instead, we see a long-term recovery. Typically, the stock market continues to crash in those cases when the first phase recovery doesn't go over the 50 to 60% pullback. You can use the Fibonacci Retracement tool to see that each time the market didn't exceed the 50 to 60% levels in the first phase recovery after the punch-on phase, the market continued to crash even harder. And oppositely, when it recovered to more than 50-60%, then it usually didn't go deeper than the first phase of the crash. In other words, the new bottom was not generated. And now we are in a situation that the market has successfully recovered the 50 to 60% of the first phase damage. So the technical analysis shows that we won't have new bottoms, but we can see the market testing the previous crash levels. Now let's dig deeper into the fundamental analysis. I want to state that we haven't ever seen this kind of scenario in the history, and this is new to everyone. So someone trying to find some similarities in the history will fail, as this time it's completely different. The this time syndrome is not a good idea usually, but seems this time it is different. This time we got a global shutdown of economies never seen before. We had seen something like this in 1929 when the Great Depression started. But then the Fed didn't behave the way they do now. So they understand that the most dangerous outcome is deflation, not inflation. And they are going to do almost everything not to allow that to happen again. We have never seen such big bailouts and stimulus systems happen in such a short period. These are the times better not to fight the Fed. The Fed is very powerful and can bring the stock market back to the levels they want. Will we have a positive outcome in the future? Of course not, but they will do it. I'm against any regulation that damages the free market, and most regulations do. Another question that many people ask is why we don't see high consumer price inflation while the Fed is printing so many dollars into existence. By the way, smash that like button if you want to show your support to this channel, and also that will help us do more videos for you. Okay, now why we don't see hyperinflation on consumer goods? Because when they print new dollars, it doesn't go into consumer goods directly. Instead, it goes into assets first. And later, when the inflation should be transferred from assets to consumer goods, that doesn't really happen because we have the biggest deflationary event in history, which is called globalization. Globalization is very deflationary for the US. So the money flows out from the US to the world via globalization. And that's why we don't see high consumer price inflation. By saying this, I want to state that we are in an economic situation that was never seen before. And that's why you can't judge the current market behavior based on historical performance. You can't find a similar case in history. I know that economy got damaged a lot, and many businesses have failed and been closed, and millions of people are unemployed now. But those metrics are economical, which don't correlate with the stock market much. Otherwise, we must have a crash every time bad news comes out. But mostly we have the opposite picture nowadays. Bad news comes out and the market goes up. I also think that most stocks are way overvalued, but I don't see the Fed letting the market crash again, at least at the same speed. I think the bottom is in and we are in an uptrend with market corrections. Or we can see some sideways trades, but that's only my personal opinion, a ballpark. We all know that timing the market is not a good idea. Is it still possible to see new bottoms? Yes, it is. Do I think we will? For now, I don't. But I can easily be wrong, as there are still many unknown and unexplained things in the economy. My analysis can be valid up to this moment. There are still many uncertain things when it comes to the economy. Even most companies still didn't report their earnings for the lockdown period. And who knows what will happen with the health damages. If we hit a new phase of a spread or other major news comes out, then nobody knows what will happen with the stock market. And I have a feeling that some significant news still has to come out. And the current market is priced into the unknown. The only thing I'm more or less sure about is that if we hit the second wave of the crash, that will not last for many years, like in the Great Depression. It can easily jump back again. I love the strategy to keep enough cash to be able to jump into the market if it crashes again. Believe me, all analysts and investors have some ideas about the market, but never expect someone to time the market correctly. If that happens, that's luck. Now the question is if you should sell your stocks or buy more. So how to be a successful investor if you can't time the market? For this topic, I have created a great video where we go deep into investing decisions based on economic forecasts. Click on the card here to watch that video. And now make sure you subscribe and hit the bell icon to get notifications when I upload the new video so that you don't miss it. And if you could take any value from this video, hit the thumbs up button and share with your friends, and leave your comments below about your economic forecasts and ideas. Thanks for watching. Watch the next video.